Right then, my friends, here we go again. Hargreaves Lansdown, is it worth it? The options for investment brokers over the last couple of years seem to have gone through the roof. So if you are considering Hargreaves Lansdown, then hopefully this video might help. We'll go over the pros, the cons, the fees. I've been using these guys for a couple of years now, so I've got a pretty good view of what I think about them. If this sounds like your sort of thing, please do consider subscribing and let's get to it. So Hargreaves Lansdown, set up in 1981. They had a turnover in 2020 of 550 million quid. So they're a big business. In fact, they are the UK's biggest investment broker. Based in Bristol, this FTSE 100 business has at last count £120 billion worth of assets under its management. So £120 billion of assets invested by the likes of you and I. Let's get to it, and we're going to go straight in with the pros. And first up, it's the funds. So they've got 2,500 funds on this platform. At first, that might sound like a few too many actually, but what it does enable you to do is have a really diverse portfolio. So if we look here, they've got a search tool, which I've used, I think is really helpful. I've used it to select all the funds that I have within my portfolio, and I'm really happy with the results so far. So you can break this down by sector, unit type, so if it's an accumulation or an income fund. I've done a video on this, so I'll put a link to that above. Fund type is here, so I'd be inclined to stay away from actively managed for two reasons. Actually, they tend to underperform the market, and they cost more because you're actively paying for a manager to manage the fund. So it stands to reason. Whether they're on the wealth shortlist or not, so I'll come on to that in a bit because we've got some thoughts on that. And a whole load of other things that you can filter, like cost, historical return, etc, etc. You can be as aggressive or conservative as you want, so you can set your risk tolerance. And there's bonds included in here as well, so a whole wealth of different types of funds. Secondly, and it's the website. And this is a preference thing, but on the website, if you're into analytics, if you're into looking at numbers and detail and looking through everything transaction you've made, the history of everything you've done on the platform, everything you can find out about your investments, this is the platform for you. It's got it all covered. Every aspect of everything you've ever done, it's all tracked, and there's tabs for everything you could imagine. At first, I suppose it can be a bit daunting, but once you get used to it, once you understand the benefits, once you've had to play around with it and you understand all the aspects of all the different things you can do, actually it opens up a whole world and it's pretty fantastic. So these are my holdings, and if I click here, you can get a fact sheet. So this details everything about the business that you're invested in or the fund that you're invested in, far more detail than any other UK platform provides. There is even, for certain stocks, this HL research tab, and this gives a detailed look into the business by one of the HL analysts. So they don't do this for all the businesses, but probably for the big boys. So I suppose if there is an appetite, let me know in the comments below. If you want me to do a video on all the functions and benefits of all the things that you can do in the website, just let me know and perhaps we'll do that one as well. Thirdly, it is Sleepability. So I've made up one. I've made up a pro here. Sleepability. That means that you can put your investments into this platform, into this broker, and you can relax. You know that nothing's going to happen. Now we know that all investments in the UK put into an FCA accredited broker is going to be covered up to £85,000, and all of the main players are. So there's little risk of these guys going bust and stealing all your money, losing all your money, losing all your investments. What it is about this point is that I just feel that HL are much less likely to make significant changes to the way they do things, that are much less likely to change the T's and C's. They're much less likely to stop you ordering the stocks you want to order. They're much less likely to stop new customers signing up. They're much less likely to increase the fees on a whim, putting it into a little subsection within the T's and C's. You don't have to constantly worry about the changes that they're going to be making that might impact your returns, that might impact the fees that you're making, that might impact the stocks that you want to buy. So that sleepability is what really gives me great confidence that the platform's going to keep doing what I want it to do. And I suppose what it comes down to at the end of the day is you get what you pay for. Yeah, it's a bit more expensive. We'll come on to that in a minute. But you get that reassurance. You get that level of confidence that this is a serious platform. Next is customer services, and they've won award after award for this, and it stands to reason why. Basically, they've got a telephone number. You can ring that up, and I've never waited longer than 6 or 7 minutes to get through to someone. Up until about the last 6 months, you get through straight away. there has been an increase in the amount of customers, and they are increasing the amount of staff that they have, but it takes a long time to train these guys up because they're very capable people. But you've got a number, and when you get through, you can speak with someone directly who 9 times out of 10 can resolve whatever issue it is, can answer whatever question it is. These are highly trained people. These are not just idiots on the end of a phone that are picking up the phone and then transferring you onto another department. Really great customer service. If you don't like chatting on the phone, they've got an email function, so you can drop them an email, put all the detail in there. You can do that through the app, you can do that through the website, or you can just do that with the email address, and they'll come back to you within about 48 hours with a really comprehensive, good answer to whatever the question was. Again, it comes back to you get what you pay for. Another one for customer service is they make it really easy to transfer in ISAs, to transfer out ISAs or accounts that you may have. So I was looking at opening a junior ISA for both of my boys last year. I was going to do with NSNI. It was when they had a pretty good interest return rate. I was in the process of doing it. I'd filled all the paperwork in, loads and loads of paperwork. I was months down the line. There was delays after delays after delays. And then the final straw was they slashed the interest rates. I mean, they dropped it down significantly. At that point, I was like, I'm out. So I went onto HL, opened a junior ISA, stocks and shares ISA through HL, transferred it across. It was all done and dusted inside a week. I've got much better control of my funds. It's linked to my account, so it's linked directly to my account, both my boys' junior ISAs. I've got full access to it. I've got the customer service level that you've got with HL, and I've actually got them in funds now. So they're going to grow significantly better than any money that I had in NSNI. So that ability to transfer funds without the headache, to be able to do all of the admin that you need to do without the headache, that's worth its price in gold. Finally, for pros, 100% pros that is, because I'm going to come on to an ambiguous one in a minute that's a bit of both, and that for me is the feeling when you're using this platform that you are genuinely creating wealth for the long term. So they've got the funds that I talked about that really help you grow. They've got the funds that are diversified. They've got the fees on the shares, right? So that's a bad mark. But what it means is you're not selling and buying left, right, and center. It restricts that ability. So it's a bit of a curveball, this one. It restricts that ability to trade so often. One of the worst things you can do is trade too often. As everyone knows, time in the market beats timing the market. So you buy your funds, you buy your shares, you're much more inclined to sit on them. You're much more inclined to not make silly decisions based on a piece of news because you've got that barrier to entry at that point. And I think that is the less tangible one, but in my mind makes me feel like I'm genuinely growing my wealth over time a lot better and a lot more assured through this platform. In the middle of the pros and cons then is the Wealth 50 shortlist. So the Wealth 50 shortlist is a shortlist of 50 funds that Hargreaves Lansdown have done a load of analytics on that they recommend that you look into in the first instance to give yourself a really diversified portfolio. And the list does change sometimes, so they change it from time to time, add in and take out as they seem appropriate. So this example isn't live as of now, so you're gonna have to trust me on this one. So when I first started on Hargreaves Lansdown, what I wanted to do, incorporate into my portfolio, was an S&P 500 fund. So the first place I went to look for that was within the Wealth 50 shortlist, and in there was the UBS S&P 500, and I've got that in my portfolio as you can see. However, I then wanted to open the junior ISA, which I mentioned before. So I thought for my kids, I wanted to have 2 funds in there. I wanted to have an all world, and I wanted to have an S&P 500 to be a little bit more stretching. And I did a little bit more research this time, so I wanted to make sure I was getting the absolute cheapest deal. By the time I'd done this, the UBS S&P 500 was no longer in the Wealth 50 shortlist. However, what I found was the Fidelity S&P 500, exactly the same as the UBS S&P 500. They're both pretty much exactly the same. I can see barely any difference between them. They're both indexes that tracked against the S&P 500. The difference is the cost. So the Fidelity fund was 0.06 and the UBS fund was 0.09. So there's a 0.03 difference between the two funds. Now that might not sound like a lot, and it isn't a lot if you've not got very much invested in this, but over time it's going to make a difference. So what I don't understand is why was the UBS one on the shortlist and the Fidelity one not? They're both exactly the same indexes that do the exact same thing. So why put the more expensive one in there? So I emailed them. Here's my email, and I asked them, how do I find out what's the cheapest way to invest in the S&P 500 on your platform? Pretty simple, straightforward question. And they came back with this, a really long-winded answer. In no way am I going to read this out to you. What it basically says though is do your own research, mate. So they're not going to take any accountability. They don't want to get caught up in any sort of implication of suggesting one fund over another. So yeah, really must do your own research when you are looking into which funds you want to buy. It could be that there's quite a big difference between cost on one versus another. So make sure you check that out because they ain't going to give you a hand with it. And I wouldn't have really become aware of that if it wasn't for one of the subscribers, James Hardwick, follows me on Instagram as well. He brought this up. We had a bit of a chat over it on Messenger over there. So thanks for that, James. Thanks for bringing that up. It's really brought something to light and hopefully it helps you guys as well. Incidentally, if you are on Instagram, do feel free to follow me over there as well. Link below for that too. Right, and on to the cons. And first up, it has to be fees. There's no getting away from it. It's not a cheap platform. So if you want to invest within Hargreaves Lansdown and you want to invest into funds, it's going to cost you 0.45%. Well, look at this chart. It's going to cost you 0.45% on your first 250k. So with the sliding scale thereafter, as you can see, there's no charges on investments over 2 million quid. One day, please be to Jesus. So it depends how much you have invested in terms of how much this is going to cost you. But it is relatively significant. 0.45% of your value of your investments are going to be taken away every year. Make sure you do have cash on hand on the side to pay for this, because if you don't have cash on hand on the side, they will sell off your funds in order to be able to pay for it. So make sure paying for these 0.45% charge is coming out of the cash that you have on hand. Share dealing costs £11.95 for the first 9 shares that you do in a month. £11.95 to buy a share, £11.95 to sell a share. It's expensive. If you're going to be doing any more than that, it drops down. Again, a sliding scale. But if you are doing more than those sort of transactions, you're not an investor, you're a trader, let's be honest. So this won't be the platform for you if you're interested in trading. But it goes back to my earlier point. It kind of stops that sort of behavior. You really commit to the businesses that you want to be buying into. Next one. There is no fractional share facility within Hargreaves Lansdown. You cannot buy fractional shares. So really quickly, so at the moment Amazon is trading at around $3,300. In order to buy that within Hargreaves Lansdown, you got to drop down $3,300. You got to buy one whole share. In Trading 212, in Free Trade and some of the other brokers, you can buy fractional shares. You can buy just 10 quid's worth of Amazon. Third con is innovation. Now they're in a bit of a tricky position at Hargreaves Lansdown because there's a lot of old money in there. There's a lot of older people. They've got a lot of cash invested into there. They've got to keep those people happy. But in order to be sustainable and grow for the future, they've got to attract new people into the platform as well. And the main reason after costs that younger people won't choose Hargreaves Lansdown is around the functionality. It's around the way the platform looks. If you look at Free Trade, it looks beautiful, great interface, great to play around with, really aimed at the younger generation. If you look at Trading 212, they've got the pies function, they've got fractional shares. Again, it's laid out in a way which is really attractive to younger people. They've got a community aspect to it incorporated into it. They've got a forum, and Hargreaves Lansdown don't have any of this sort of stuff. So they've really got to start to try and find the balance between keeping the old money happy and starting to attract some more of the younger people into the platform, otherwise they're going to struggle. Now, I've talked about Hargreaves Lansdown website already. It is one of the best ones out there in terms of some of the educational tools that they have, some of the facilities that they have, some of the ways that you can learn about businesses. It's the best that there is out there in the UK. They've just got to try and strike that balance right between attracting younger people. It's an old looking website. It's not an attractive looking website. The app is old looking. Yes, it's functional and it works great and it does what you need to do, but it certainly isn't as modern looking as some of these other ones. They certainly don't have some of the functions that are attracting some of these new investors, and they've got to get that balance right. So do I recommend Hargreaves Lansdown? Short answer, yes, absolutely. I've used them for a couple of years with great success. I'm really happy with them. I've held my ISA with them for the last 2 years. This year I've moved over to Trading 212. I've done that so I can get some experience with it, so I can really know about it. I have a finance YouTube channel, so I need to know about all of the different ISAs that are out there, and I might chop and change every year as we go along, but I really do rate Hargreaves Lansdown. I probably am going to use them again in a future year for my ISA. I think they're a great platform. I think I really feel confident with them when I'm investing my money into them. I think I can create a really good diverse portfolio that in the long term is going to generate wealth for me, and that's, at the end of the day, that's what I'm aiming to do. So yes, I absolutely do recommend Hargreaves Lansdown. I'll put a link below, so feel free to use that if you want to start using Hargreaves Lansdown yourself. If you found this in any way useful, please do consider subscribing. As I've said before, give us a like, it really does help. And if you've got any comments, please drop them below, and I look forward to seeing you all again soon. Take care. Thanks a lot, guys.